All right, shares of Airbnb tumbling again after the company reported earnings on Tuesday. The company posting its most profitable second quarter to date. Kiko Fujita, joined by Airbnb CEO Brian Chesky. Hi there, Kiko.
Hi there, Dave. Let's bring Brian right away. Brian, certainly good to talk to you today on the back of another strong quarter, but want to get your reaction to the results, as Dave pointed out. I mean, we're talking a record Q2 in terms of profit. You're projecting another record quarter going into Q3. You had gross booking value up 27% to $2 billion share buyback, and yet we saw the stock extending its declines today in this session. I mean, what do you think investors are missing? And more importantly, what does that say about the sentiment about the broader travel sector right now?
I mean, I think it's saying that there's probably a lot of uncertainty in the market right now, but I think it's important to just note that yes, we had our record Q2. And just to put a couple things in perspective, revenue was up 58% year over year. We generated nearly $800 million in free cash flow, $700 million in adjusted EBITDA. So I think we're feeling really, really great. And the other thing we mentioned is that actually bookings accelerated between June and July. So I guess what I would say is I try not to worry too much about the stock price. There's an old book that circulates Silicon Valley, a Bill Walsh book, The Score Takes Care of Itself. And if you think about that, it's our job to make sure we do everything perfectly, executed as well as possible. And we've been extremely disciplined through the crisis. The reason we had a record earnings, record profit was because of the discipline we've made. We haven't had to adjust our hiring plans. We've stayed incredibly disciplined. We are going to continue to do that. We heard your CFO, Dave Stevenson, say on the call yesterday that we are heavily in growth mode. We are not in profit maximization mode. I mean, not a lot of companies out there that are saying that right now. And I realize you're seeing strong demand, but walk me through your thinking on how Airbnb could potentially weather a significant downturn at a time where a lot of people are concerned about the macro outlook. How do you think that's going to affect your demand? Well, we've already been through this movie before, probably something much worse, because in 2020, when the pandemic occurred, we lost 80% of our business in 8 weeks. We're not forecasting anything like that again. We hope that was a once in a decade or once in a generation event, hopefully maybe even less likely than that. And what we noticed and we learned was that our business is incredibly adaptable because we were able to respond and recover faster than any other company in the travel industry. And that's because we have nearly every type of space in nearly every community all over the world. So however travel changes, we're able to adapt. And Airbnb is a very affordable alternative to hotels for a lot of people. And so during this economic environment, I think a lot of people are going to turn to Airbnb. And I think that explains why we're feeling really great about Q3 and why bookings accelerated between June and July. Yeah, let's pick up on that point. I mean, you mentioned that you're seeing the highest demand that you've seen within the company. And yet I'm going back to when the company started. A lot of people turned to Airbnb at the height of the financial crisis to try and make some extra income on the side. Are you starting to see some of that behavior return in terms of the supply side as more and more Americans try to find ways to make extra income with higher prices? Absolutely. I mean, one of the things we noticed is when the pandemic began in 2020, we weren't signing up as many new hosts, and that's expected. People were a little bit nervous about having other people in their home. What we are now seeing is people are once again much more comfortable having people in their home. And once again, just like the financial crisis, when Airbnb started, we're seeing a lot of people turn to hosting. I think the reason they do that is because you can be able to get a booking, the typical host, within a week of listing your property on Airbnb. It's not a lot of effort. And for most people, you don't have to do a lot. You just have to list the space that you already have. And so I think this is going to be a very important thing. It is one of the easiest ways to make passive income with the asset you already have. I think that's something that people are looking towards during the economic environment that we have right now. Yeah, let's talk about cash flow here. $795 million in the quarter. A bit of a drop from the $1 billion the previous quarter, but certainly you're expanding your balance sheet here. $10 billion. You take out the $2 billion in stock buyback. You've still got a lot of cash to play with. What are you thinking in terms of that next step for the company? Potential acquisitions, potential services being expanded. Walk me through your thinking. Yeah, I mean, let me start by saying that our free cash flow has improved considerably quarter over quarter. Now, it can vary from quarter to quarter. That's more about this timing and seasonality of when we recognize the revenue, which is based on when people are checking into their Airbnbs. but it has been growing increasingly, right? Nearly $3 billion in the last year, $10 billion in the balance sheet. So we're going to still have a very high ROI for any new investments we're making. The big priorities we have are signing up more hosts. We think that if a host lists on Airbnb, they're going to get booked. That's our number one priority. We want Airbnb to be the ultimate host to our guests and hosts. We're going to continue to invest in providing world-class service through air cover, which is top to bottom protection for guests and hosts in the event that anything ever goes wrong. And then finally, we want to continue to help people not just travel on Airbnb, but live on Airbnb. So these are some of the priorities we have now. And maybe what I'll say beyond that is we are thinking expansively now. When the crisis happened, we got back to basics. We got really, really focused. Now, given what we're seeing in the business, we think we're ready to step on the gas. And so in the coming years, you're going to see some really new, exciting offerings from us.
Finally, Brian, the last time we spoke, you just told your employees that they can all go remote, not just in the US, but they can go abroad as well. And you've been very consistent on that in terms of remote work here to stay. I heard you say yesterday on the call that you still think that face-to-face interactions are important. Maybe not 100% remote, but be good to have your employees come together once a quarter, maybe a week. I mean, has your thinking kind of evolved on that?
No, absolutely not. In fact, when we rolled out the Live and Work Anywhere policy, I said the following. I said that the days of most companies requiring people to go back to the office 5 days a week is probably not going to endure. The reason why is the best people are going to be everywhere. And if you want the best talent, you have to have a flexible policy. And so Zoom is very effective. That being said, and I said this when we rolled out the policy, I don't think we want to be 100% on Zoom because Zoom is not great for forging new relationships or deepening those relationships. And so the guideline we had is we want to get employees together about a week a quarter, and that's what we're going to be ramping up to. So it's actually been a very consistent policy, and I think it's going to stick. This is me trying to predict the future, but I think we've been pretty consistent and it's going well so far.
Airbnb CEO Brian Chesky, always good to talk to you. Appreciate the time.
Thank you very much.